Last week I recommended a Strangle and corn. If you look back through the videos, you can see where we talked about that trade. I drew a white line right here where I entered the trade, and what I did is I sold a 425 put, which you can't see it in here, but it's up in this area. I'm sorry, 425 call up in this area, and I sold a 355 put. And I was basing it mostly on this chart, which is in my Bollinger Band chart, and on this TTM squeeze indicator, which was coming down as these colors changed, and it indicated that there might be some consolidation come through without any big moves, because we still had a move going on until it ended right here. I got a little worried yesterday when we got this big down candle, and I was originally trying to get about half of my gain, or half of my credit when I sold this trade. I sold it for $1.87.5, and I ended up moving my stop up to $1 after this candle because I was a little concerned with everything that was going on that it might continue down, although I did have this trend line right here that I was hoping to get some support out of. And what happened this morning is we did get a bump up off of this trend line. I did get some support here. Also keep in mind this right here is a 3 deviation move in the Bollinger Band and hit here. So I wasn't completely shocked that I got this bounce here. And my last night or early this morning when the options market closed, it actually hit my good to cancel order, and I was able to get out of this for $1 of my $1.87 credit that I initially had. Let's take a look at a couple of other charts real fast, just so you can see kind of the price action that led me into this, and then I'll show you the trade sheet. This was the wave chart, and you can see when I entered the trade, we're right in the middle of the wave. Honestly, a lot of times I'd rather enter a strangles. Sometimes when it's not in the middle of the wave, if I've got good implied volatility, so I can get a little better credit, say on the top side, maybe move it a little closer. You can actually see the 425 level is right here. So I had different price level support. I had price level support here, price level support here, and then a final level of price level support right in this area. So I had a lot protecting me. On the 355, I didn't really have this support, but I did have support here, had this trend line, and I was hoping I would have this trend line, which I did. If I had this trend line, and right here at 355 was where my short put was. And you can see I didn't quite have this price level as support, but it was pretty close. Had a couple of trend lines. This is the 2 ATR Keltner channel. So again, I got a bounce off of it here. I was expecting another bounce off of it here, which I did get. Let's take a look at the moving average chart. Now the moving averages really didn't tell me much. I was using the moving average chart more as a resistance to protect my 425 because we're trading right around the 200, and I was hoping it would keep bouncing through there. Overall, this trade looked pretty much perfect. I got a little impatient, so I didn't make as much money. But it was a profitable trade. Commissions, I don't have a great commission structure on my TD Ameritrade account with futures. I'm going to have to look around and try to find a little better option there. I do use Tasty Trade sometimes, but they don't let me put the good to cancel orders out there, and I really like to leave those out there so I don't have to monitor it every single day. So it's you pay a little more commissions on TD Ameritrade, but you can keep those good to cancel orders out there. Let's look at the trade sheet. This is the trade sheet that I put together on this particular trade, and you see all my trade sheets look pretty much the same. You got a start date. Normally I have a trade number because I keep up with all my trades individually. I think this one was 761 if I'm not mistaken. I had the risk when I entered the trade. It was a little bit higher than actual risk because I figured it would fluctuate some as the price moved. I had implied volatility at each when I entered, when I closed, which actually went up because of that down move, but I was still able to get out of it, and the initial probability of the trade. And you can see I set my initial close at about 50%, and I moved it up a quarter yesterday because of that red candle. Again, got a little nervous. I probably should have waited. That was an error on my part. But I entered the trade for $1.87, had $16.88 in commissions, which sucks. I closed it at $1, basically 50 cents here, 50 cents here, and again, $16.88 commissions, which sucks. But overall, I've got about a 3.5% return in 9 days, which annualized, that's 145%. So that's not too bad on a very high probability trade. If you like this video, please like it, please subscribe to the channel. If you have any questions, let me know, and I'll talk to you next time.